Okay, let's talk about the basic accounting equation. Asset should be the same as the sum of the liability and equity. This equation provides the underlying framework for recording and summarizing economic events. Well, this equation, asset equal sum of the liability plus equity, applies to all economic entities, regardless of size, the nature of the business, and the form of a business organization. Okay, let's talk about the assets. The assets, the common characteristic possessed by all assets is the capacity to provide future service and benefits. The resources a business owns and provide future service or benefits. And examples of assets are cash, inventory, and equipment, accounts receivable, notes receivable, any investment, and land, building. All these kinds are under the category of asset, because assets are the resources which owned by business and will provide the future service or benefit to the corporation. That is asset. And let's talk about the liability. The liabilities, creditor may legally force the liquidation of a business that does not pay its debt or obligations. In that case, law requires that creditor claims be paid before ownership claim. So liability is claims against the asset, and the creditors are party to whom money is owed. And examples are accounts payable, notes payable, unearned revenue, and there are taxes payable, and there are many titles under these liabilities. And let's talk about the equity. Equity, the assets are claimed by either creditors or shareholders. And to find out what belongs to our shareholders, we subtract the creditor's claim from the asset, and the remainder is the shareholder's claim on the asset that we call equity. And it is often referred to as residual equity, that is, equity left over after creditors' claims are satisfied. So equity, once again, it is ownership claim on total asset. So total asset minus creditor's claim, whatever left over, it is equity. And so asset minus liability supposed to be equal to equity. Referred to as residual equity, and the examples are share capital ordinary and retained earnings. Those are under equity. Well, the revenue. The revenue result from business activities entered into for the purpose of earning income generally result from selling merchandise, performing services, and renting property, and lending money. So revenue result in increased equity. Accordingly, it will increase asset as well. Okay, because assets supposed to be equal to liability and equity. And Let's talk about expenses. The expenses are the cost of asset consumed or service used in the process of earning revenue. They are decrease in equity that result from operating the business. Well, examples are common expenses are salary expenses, rent expenses, interest expense, property expenses, and property tax expense or cost of goods sold, etc. Okay. Dividends. The dividends are the distribution of cash or other asset to shareholders. And dividends are actually net income represent increase in net asset, which is then available to distribute to shareholders. Well, for example, revenue minus expenses supposed to be net income. In the situation of net income, then company decide to distribute dividend to their shareholders or owners. So dividend is not an expense. Actually, dividends are paid out to owners right after calculating net income. So to calculate the net income, expenses are already included. Included. So it is dividend is not expenses. So 안 들어가지? Okay. Let's talk about transactions. Transactions are business economy events recorded by accountant. Maybe external and internal. While transactions, external transaction involves economic event between the company and some outside enterprise. Examples are buying inventory from suppliers, buying equipment from makers, payment of a monthly rent to the landlord, and the sale of a product to customers. These are external transactions from company dealing with outside of enterprise. However, internal transactions are economic events that occur entirely within one organization. Examples are paying salaries and wages to employees, and bonuses to all the executive and employees, and the stock option issued to executive. These are internal transactions. Not all activities represent a transaction means that, for example, hiring employees, answering the telephone, talking with the customers, placing merchandise orders, designing matter. As long as it is not involve monetary transaction, those are you should not include in a transaction. The transaction has to be involved with monetary units. Okay, each transaction has a dual effect on the accounting equation. What's the dual effect? If assets increase, then must be corresponding decrease in asset, decrease in another asset. So there must be an equation. Increase asset and the decrease asset, there is a zero, so offsetting each other. And increase in asset, either they are going to increase in liability and equity. For example, assume that you are going to purchase a BMW automobile, and you do have only 20,000, and you are going to borrow money from your bank, 30,000, then what is asset? Asset supposed to be BMW automobile, and 20,000 is a liability, and 30,000 is liability because you borrowed the money from the bank, and 20,000 is your own money. So that is equity. So the equation, asset 50,000 equal the liability 30,000 plus 20,000 equity, so they must be equal. There is an equation in equality, right? Okay, that is a dual effect. Well, illustration. The following events recorded in the accounting. Purchase of computer. Yes, you should record, because you are purchasing computer from outside external parties. Okay, it is external transactions. However, if you discuss about the product design with your customers, no money involved, so you should not record. It is you should not record. Excuse me, the pay rent to your landlord, of course, that is a transaction, so you should record. Okay, transaction analysis. Well, obviously, I mentioned several times the assets supposed to be equal to sum of the liability and the equity. And under the equity, there are two. One is share capital and retained earning. Let's talk about the share capital. Corporation may obtain fund by selling ordinary stocks or shares to investors. It is the term used to describe the amount paid in by shareholders for the ordinary shares they purchase. So then retained earnings determined by three items: revenue, expenses, and the dividends. Okay. Then what is the revenue? Revenue are the gross increase in equity resulting from business activities entered into for the purpose of earning income. Okay. Let me re-emphasize about the revenue. The revenue are gross increase in equity resulting from business activities entered into for the purpose of earning income. And then what is the expenses? Expenses are the cost of asset consumed or service used in the process of earning revenue. Then dividends. The dividends is a net income represent an increase in net asset which is available to distribute to shareholders. The distribution of cash or other asset to shareholders is called the dividend. Okay, let's do the analyzing the transactions. Okay. Let's read the transaction 1. Investment by shareholders. Ray and Barbara Neal decide to open a computer programming service company which he names SoftBite. On September 1, year 2014, they invested €15,000 cash in exchange for €15,000 of ordinary share. Well, that means Ray and Barbara set up the corporation. The corporation, which is do a computer programming service, the name of the company is SoftBite. On year 2014, September 1, Ray and Barbara Neal made investment $15,000 into the SoftBite. Well, in this case, the asset increased by $15,000, which is cash, and assets supposed to be equal either liability or equity. In this situation, cash increased by $15,000 by Ray and Barbara Neal, who are the shareholders of SoftBite. So cash increased by $15,000, and then also equity, ordinary share capital ordinary is increased by $15,000. So there must be equation, equality in equal in equation. Okay. Well, see over here, number one, cash increase of $15,000, and the share capital ordinary increase of $15,000. There is equal in equation, isn't it? Okay. Number two, transaction number two, purchase of equipment for cash. So SoftBite purchased computer equipment for $7,000 cash. So, well, equipment is asset and cash is asset. So increase of equipment paid by cash. So one asset increase and the other asset is decrease. There is the equality in equation, right? Okay. Okay, transaction number three, purchase of supplies on credit. On credit means, the postponed payment to the, suppliers. SoftBite purchases for $1,600 from Acme Supply Company, computer, paper, and other supplies expected to last several months. This purchase is on account. On account or on credit means did not pay cash but promised to pay cash later date. That's on credit or on account. So these papers are going to use for several months. Several months means they are not going to consume in the month of September. So that's supposed to be an asset, which is resources will provide future benefit, right? Asset. So we have to put all the purchases put in under the title supplies. So asset increase $1,600 and the accounts payable increase $1,600. Okay, transaction number 4, service provided for cash. SoftBite received €1,200 cash from customer for programming service it has provided. Okay, so this one is transaction number 4 is they perform the programming service to their customers. So it is a revenue. It is a revenue. So they received the cash. So cash increased $1,200 and also revenue supposed to be increased $1,200. So there is, the equal between asset and equity. Okay.